Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 84. And we can't let this opportunity go by to talk about interest rates. I know it's been a huge topic for a long time, but since the last Weekly Wisdom, we've had a rate cut, the first rate cut in over 4 years here in Australia. And so we have to just take the opportunity to pause, take a deep breath, and enjoy the fact that we finally have a rate cut. Probably about, in my opinion, about 6 months too late, but we finally got one. And as you scan all the news articles, you see all the reasons why the RBA still isn't 100% sure they've done the right thing. But today I want to focus on what's happened since the rate cut and not whether or not it was the right decision or not, because I've harped on that one for some time. So here's the article. Banks who haven't passed on the RBA cut have been exposed. And we go across, and if we go up to the top of the article here, RBA February 2025 rate cut, banks yet to pass on the cuts. And they're saying at the time of writing that there was a huge number of banks and lenders that had yet to pass on the cut. Well, the good news is that the big four banks were very quick to pass on the rates. In fact, I believe the big four banks had their announcements already written and just hit send as soon as the announcement came out, because they were so quick to come out, and that is highly unusual for the big banks to move so rapidly. So they either anticipated that it was coming or knew it was coming, and they wanted to get on the front foot to look like the good guys. The interesting thing is they pretty much took the same. I think one of the big four banks is holding on to your money a little bit longer, but the majority of them said, well, it's going to take us at least 2 weeks to pass on that rate cut. And if you've been playing along at home, you will know that historically, when there's a rate increase, it gets enforced almost straight away. But when there's a rate cut, for whatever reason, it takes them a bit longer to pass that on. Anyway, this article goes on to talk about and provide you with a long list of those that have passed it on, but it don't necessarily expose those that haven't. And so if we go down and we can see here, here's the long list of the different banks that have passed on the rate cut. And what I want to really highlight here is, as you scroll through this list, is just the vast range of banks' lowest variable rates once those rate cuts have been passed on. So you can see some here at 28th of February. So three of the big four. Then you got Westpac hanging on for another week. But then you got others that are doing it straight away. And then all variations of different times. But then when you look at the rates, you can go from 6.19 with the big banks, maybe 5.84. But then as you go down, you got 5.44. I think this was the best one, 5.13 with Bank Australia. And then the worst one was, it still had a 7 in front of it, which was right at the bottom. I think it's Yellow Brick Road, 7.39. Obviously, you're going to stay away from that rate. And if you look at these rates and your bank's not providing you with something similar to this, then now is a very good time to start having conversations with your bank about passing on cuts and trying to get them to match other rates. And if they won't, then that is your invitation to go and talk to another bank and get a better deal, because there's absolutely no reason why you should be paying 7.39 or even 6.69 when you can be getting from the big banks 5 point something. And even from some of the smaller banks, if you want to go down that path, and there's no reason why you can't, you can get much, much better rates. And these, 5.13% is a phenomenally good rate compared to some of the others. Always look and see what their fees are, and therefore what their comparison rate is. The comparison rate accounts for all those fees and makes it a whole lot more comparable than just looking at the headline numbers. So that's interest rates. As I said, they've clearly updated this article because more and more banks have come out, and so now they're not necessarily exposing those who haven't. They're providing a list of those who have. And the other comment I wanted to make about the interest rate cut is if you're in a scenario where you've been managing, reasonably well with the payments that you've been making on your mortgages at the previous rates, and the rate cuts come in, maybe one of the things you're going to do is continue to pay at the old rate so that you're making greater contributions to the reduction of your loan, and that will wipe out years and tens of thousands of dollars in repayments if you're able to hang on and do that. I say that at the same time as suggesting that if you haven't been able to invest because rates have been so high and now you've got a little bit of free cash, think about maybe getting that money into some investments so that you've got not only your home as an asset, but you're also accumulating other assets that will generate you an income stream in coming years. And, pardon me, grow at a rate more than what you're paying on interest on your loan. So that's a really important consideration with what you do with this rate cut. Make sure that you use it effectively to increase your wealth over the long term. Whatever you do, try to avoid allowing it to just slip out of your hands into other costs or other lifestyle expenses. Look, while we're here, because this is a relatively short article and this list has clearly changed since the article was written, I want to also just highlight something that I'm seeing in the other part of the news when it comes to the share market. And you're seeing, tumbling. I think it's in here a couple of times about what's happening in the stock markets. If we scroll further up, maybe not. But anyway, it's mentioned here and again further down here in the market. So ASX dropping and why it's dropping. Here's these two articles. So in one, it's NAB and the mining resource earnings, and this one's it's the big bank and Woodside woes. I think the thing to know is if you're not familiar with the stock market and the reporting seasons, August and February into March are big reporting periods for the ASX. So lots of companies required to report either their half year or full year results. And so we're going to hear a lot of companies coming out with their actual results and comparing those with what they said they were going to do. And when you see something like the mining resource company earnings missing their forecasts, that is always going to lead to a negative reaction on their share price. So that you'll see some of the big professional investors punish those companies for not hitting the forecasts and sell them. And so you're going to see some overreactions in a lot of stocks if that happens. It doesn't necessarily mean they're a bad company, just means they didn't hit their targets. And so you want to have a look and see if you're invested in any of these. You want to look and see what the fine detail in the report is talking about in terms of where they see the coming years being. With the amount of uncertainty in the market at the moment because of a certain US president, it's very hard for anybody to make good forecasts as to where the economy and the markets will be, because there's just a lot of flipping and flopping in terms of tariffs and world global issues. So just be very mindful of that. There's lots of volatility in share markets at the moment, but rather than fear the volatility, see it as an opportunity, and potentially you might get some discount on some stocks that you already own, and it's not a bad time to dollar cost average into some of your existing holdings. So be mindful of the fearful headlines. Be also wary of the fact that we are in reporting season and there's going to be companies that miss their targets because of what's been going on globally over the last 6 months. Not necessarily time to panic or get overly negative on the stock market. So that's Woody's Weekly Wisdom, episode 84. A great week to at least celebrate the fact that we got that rate cut and also to be very mindful of what's going on in the stock market, given we're in reporting season. So what is Weekly Wisdom? Episode 84, that's a wrap. And as always, if you're watching on YouTube, hit the little bell and the subscribe button to get notified when these come out. It helps us grow the channel. More people get to see what we're putting out. And if you're watching on socials, on Facebook or LinkedIn, hit the like, comment and share buttons. They also help us get this across to more people so they can be informed and know how to navigate the financial headlines. Have a great week. I'll see you again next week. Cheers.